prepped up here. I thought I have the trading economics website. I have it saved for like US settings and high impact, the tab. But sometimes when I go back to it, it doesn't save it, which I can't tell you why.
It's very annoying. Yeah, 100%.
All right,
Very,
so
very annoying.
I'm not the only one. That's good.
Yeah.
All right, all right. Well, shall we? For those of you that are listening in, welcome to the weekly market preparation with Dan and I. We do the best we can to do this every week, where we basically come and work together, invite you guys, and invite our team to prepare, like professional traders should and do, for the week ahead. We go over basically the weekly structure of what we do, is the general market backdrop. We go over the macro geopolitics that really matter to traders specifically. We go over key tickers, earnings setups, and trading levels that we're looking for. So we go over equities, overall markets, and then also commodities as well. So if you are commodity traders, obviously please join us. We have a solid squad, a solid team that we are trying to grow. And then at the end, or near the end, we have a special topics that we provide each week. And this week is how to keep your cool with losses. It happens to the best of us. If you are following people that say they have a 100% win rate, they are complete liars, run the exact opposite way. Everybody loses in this game. And it's those that survive are the winners of this. And if you cannot keep your cool when losing, you're bound to blow up your account, lose a lot of personal money potentially, and never really learn the art and the skill of trading as what it takes to be a professional. And then we will add or end with a good old Q&A. So with that being said, let's run the overall market backdrop. The SPY, where I have the SPX chart. If you guys open up my live stream, it's closing at it didn't close at all-time highs, but it's hanging out at all-time highs. It's 0.4% away. It looks strong. I always like to say that time correcting markets, I get it from Brian Shannon mostly. Time correcting markets are stronger markets than price correcting markets. And if you look at the chart here, you can see we really did nothing for, you can go back to early May. It just chopped sideways for quite a few months. And then on, let's say Monday, August 3rd, we had the attempt of a breakout, and then we had a nice follow through on August 4th. And then we just chopped around for about a week, tagged the 5 EMA, and we were starting to push higher. Will it continue to go higher? Who knows? Nobody knows. But overall, it looks pretty solid. Looking at the RSP, the equally weighted, again, there is a slight lag in the live stream. I tried updating my computer settings, and that did not seem to help, unfortunately, even OBS settings. So I'll try something else next time, I suppose. Letting it catch up here. RSP, the equally weighted S&P 500. So again, it takes all 500 names and it puts the weight of each, it equally distributes it. So the Mag 7 are not super heavy, which is make up like 40-something% of the SPY. So this, looking at the chart, it's up and to the right. It's trending. It's holding the 5. It's holding the 8. Pulled back to the 21 a couple times. Every time it's a pull back to the 21, it seems to get bought. So this market continues to trend upwards. NDX, that hasn't been the same story. This was actually, and still is, I would say, a laggard. It rolled over here a little bit. It found support near the $27,350 level, just above the 200 EMA. And then ever since then, it bounced pretty strong back into the chop area. We haven't broken out all-time highs, but we are 2.3% away from all-time highs. So with a lot of the earnings out of the way, I don't know necessarily what's going to be the next catalyst to break this out. You can make the blanket statement of the AI trade, the build out, semis, blah, blah, blah. Honestly, I'm not 100% sure. I think we have more headwinds than anything. Looking at SMH, I pointed this out last week. If you guys watched my video or any of the posting, I said that SMH actually, I've been dogging on it for the past few weeks, right? And I think it's actually starting to shape up. And if you look at the individual names of the Semiconductors, they look like they're okay. They have a potential to start turning around. I have a down trend line here on the SMH. If you like trend lines, it's breaking that trend line. It has a potential higher low here. It's holding this gap up from Tuesday. It's above all the short-term EMAs. It's now back above the 50 EMA. And the same story is true with the SOXX, the SOX here. And so semiconductors, what led the market before, might start leading again. I don't know. What do you think, Dan? What are your thoughts on all of that?
I think it's for the next 2 weeks to say anything is going to lead or lag. I think it's a fool's errand. You have a
Yeah.
situation now where,
Explain more.
where, where historically the last 2 weeks of August are dead. And it doesn't make a difference. Option activity, it doesn't make a difference. Computers, you could see it. The volumes are not there. The volume's not there. The
Mhm.
volatility is not there. The liquidity is not there. It's just not there. So for the next 2 weeks, it's basically your goal should be low gross, low net. That's really your goal, because you're just not going to get it now, especially next week. It just at this point in time, we've had a relatively big bounce. Things that were leading are not leading. Things that were lagging are waking up, but they're not really waking up. So it's this time of year where it's just there's like a couple of times historically throughout the year that you just have to be a little bit more low gross, low net, and that would be the last 2 weeks of
Mhm.
August are like that. The last 2 weeks of December are like that. So it's just like they're just, and then things kind of start to wake up afterwards. But for now, you just really have to be. You can't look at things in the same way that you would, let's just say, in April, May, June, or January, whatever, than you can the last 2 weeks of August because the breakouts that you're looking for are not there. Things tend to be very, very dull. I mean, you just look at the way, even if you look at just the overall volatility. Like for example, over the past 8 days, let's just say 8 trading days, using the NQ as an example, it was averaging 354 handles. Prior to that, it was averaging double. It was averaging almost 600 to 700 handles a day. We were moving like 3% a day. Now that has completely been sucked out. So you have to really, really be on your toes from that regard, where you're not going to get the power moves. Now, obviously, if something changes, like there's some kind of crazy news, then obviously then all bets are off. But
Mhm.
from a historical standpoint, you're pretty much a lot of guys at this point take off. Like there's no reason to even be around. Honestly, it's probably not what people want to hear, but that's just the reality.
Can you so for the viewers and the listeners that don't necessarily understand why, and even I myself would benefit from a refresher of necessarily why is the basically at the end of summer, everyone, I think most people know that sell in May and go away, right? Is this low volume at the end of August here? Is it part of that, or why is this part of the end of August historically low volumes?
It's the last time before school starts where people take extended vacations. That's
Simple
really
as
what it
that.
is. It's people take extended vacations now because really after once September, after Labor Day and summer's over, then really what's your next vacation? Your next vacation time is not really until December.
Mhm.
So you don't have to, you don't really have anything. So and obviously in certain parts of the country, schools already started. So it just depends. But people are still going away for weekends. You have nothing on the docket now. Everything's behind us, meaning there's no earnings coming. The Fed is basically out of the way because CPI and PPI are out of the way. They came in relatively stable. So Fed cuts or hikes on in September are basically kind of it's a crapshoot as to what people think they're going to do. You have midterms
Mhm.
coming up, so like there's really no catalyst right now to like move anything. You have a war where every 5 minutes you have people. It's the war's over, the war's not over. We're shooting, we're not shooting, we're bombing, we're not bombing. So like nobody really wants to commit capital now, and really this is the last time where people can kind of start to, at least if you follow a fiscal year, your fiscal year ends in September. So this is really your last time to kind of do your analysis for what you want to do in September before you reallocate your books. So
Right.
there's two types of years. There's a fiscal year and a calendar year. A lot of funds, mutual funds, pension funds, etc., hedge funds, whatever, follow a fiscal year. So their year is going to start closing in September. They're going to close their year. So they'll take their time now to kind of see what did well, what didn't do well. What should we, what should we allocate to? What should we not allocate to? How should we change things around, et cetera, et cetera. Most of the time in summer, the last 2 weeks, again, it's really simple, is that people just take vacation. They take their last, they basically take their last legs of vacation. There's no more earnings to really, really move things. Commodities really, really die. For example, I'll use coffee as an example. Coffee on an average day does 35,000 contracts. Now it's doing a third of that every single day, a third. So it's really, there's just no one around. The machines are around, but the people who are, but that's always around. But like the people who are like moving money, they're not really around. And if you look at the volumes, they're just not there. They're just not there. So you really have to be, it's kind of like, like a trade. Keep it simple, stupid. People aren't around. It's just that simple. Last 2 weeks of August, people are just not around.
Less is more in August. Yes.
Yeah. I'd love to give an analysis, but it's really that simple. It's just people aren't around. It just, now granted, can things change? Of course things can change. Can you get outsized moves because the liquidity is not there? Of course you can. But right now everything is basically subdued. Tech is not a leader at all. Leaving semis out of the way, tech is not leading. What's leading is S&P and Dow. That's really what's leading, surprisingly. Tech kind of bounced, but it's not really pushing. It's not really pushing anywhere. So I mean, could we drift to all-time highs? Sure. I mean, there's a saying, never short a dull market. We're in a dull market. So does it make sense to put shorts on now? No.
Never short a dull
just keep drifting. Yeah.
I've never heard that before.
Really?
Yeah. Surprisingly, yeah. I've heard a lot of stuff, but I've never heard that.
I mean, listen, could tech drift to all-time highs by the end of the summer? Sure. 100%. 100%. I don't see why it couldn't.
I was going to say, it's not that far away.
Tom Lee has an $8,000 price target on the S&P. I mean, it's not such a crazy price target. We're not so far from there. So we could definitely drift there. If anything, I would probably be looking to put on swings for a move to all time, for a move back, for a move for tech to get to, all-time highs. It's not so crazy. We're less than 1,000 handles from there.
It's really you say 8,000. It's only another. Yeah, it's like 2.75%.
Yeah. So
it's not. That's nothing at all, really.
At this point in time, nothing's really rocking the boat. Obviously, anything can happen. I wish I had something better, but it's just.
All right.
It's just that time of year.
Anything special on earnings this week? I know Home Depot. That's an important one, right?
Nobody cares about that.
I mean, you can't fabricate something if it's not interesting. You can't fabricate it to make it interesting, right? It is what it is. If it's just low liquidity, people are on vacations at the end. I mean, it is what it is at that point. It's no big thing. Earnings.
Nobody cares about it. Yeah,
nobody cares about Home Depot. Got it. Nobody cares about it. I thought
they're not market movers.
Nobody cares about Target, right? Nobody cares about Lowe's. So, Walmart's good, how the consumer's doing, right?
Yeah, they'll look at Target. I mean, you'll have single stock stuff, but they're not moving the market. Like Target's not moving the market. Walmart's not moving the market. Home Depot, I mean, they're single stock stuff. By the way, I've got some kind of blue screen of death over here, so I'm going to get out of this. So let me look at Target. Hold on. You want to start with Target first? Let's look at Target first.
Sure, we can look at Target.
I mean, What's your entry? Where's your entry here? I mean, this thing has been just going up the entire time. Where's your entry? How do you buy this and
Yeah,
feel
you miss
safe?
it. Yeah, I mean, you'd want something all the way down by the 21 at 145. I'd say minimum to feel okay.
I mean, you could buy.
Maybe
I
maybe
wouldn't buy this ahead of
140
earnings.
like the retest. Oh no, 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 no. I'm
I
not
wouldn't
saying
buy this
that at
ahead of
all.
earnings, but I'm saying,
This thing doesn't move enough for me personally, anyways. I mean,
I mean,
yeah, you missed the move, right? You got the breakout of 130 bucks or so, 132. You missed the move, really.
I don't want to.
This seems
I
in.
Well, go ahead.
Yeah, it's been strong. No, I was just gonna say it's been strong. Actually, it's been trending pretty good.
Home Depot's a choppy, sloppy mess, so there's really nothing there. I mean, there's
It's
nothing.
HD, right?
Yeah, there's nothing to really talk about over there. I don't know if Lowe's is reporting this week, but Lowe's is basically
I think
doing
Lowe's
nothing.
is.
So that's a
Yeah,
big waste of time. Let's see, Walmart. Let's look at that. I mean, they're not exciting. I mean, I'd love to tell you that they're just not exciting. There's nothing there to get like excited.
right. Yeah, these things are. I don't know. I don't really watch them. They're you have taught me really to focus on be in places where I need to be in and be where volatility is. In my opinion, how the things that I've learned that I like, these are not the names that I like. They're way too slow for trading wise. They're not heavy enough to actually, like you just said, be market movers. So I don't really pay attention to them myself. um I don't know, from what I've learned from you, like they can be measures of how the average consumer is doing, but they're not market movers overall, so I don't really pay attention to them. I don't know, I guess that's really it earnings wise, right? So earnings seasons, that's mostly past us. That's all in the rear view mirror. We had a lot of blowout earnings, but mostly that is just because of efficiency, really.
I mean, if you look
I don't
at,
know,
yeah, go ahead.
yeah, go ahead after you.
I was gonna say was like you have the nicey fang sitting, back at June highs, but at the end of the day, NDX is not moving. So like
Hmm.
it's not going anywhere. I mean, so we'll have to see. I mean, it's there are people who have plenty of people who are just have short on the brain constantly. I don't have short on the brain. I don't think that the markets are short. I think that that's over. Could there be retracements? Yeah, but I think more you're going to get choppy, sloppy action. I don't think you're even going to get two-way trade. The market is not forgiving right now, like at all. Trust me on this. It's not forgiving. You make a mistake,
Hmm.
you're not being forgiven. It's just not happening. So it's just the environment that we're in. The environment is not conducive to these, it's really basically kind of sit tight.
Agreed. Tuesday, we have building permits, housing starts, and then Wednesday we have FOMC minutes. They're high
Snooze and
impact, according to trading economics calendar.
snooze and snoozer.
I was going to say, like, does it really? I don't really pay. I don't know if I've ever heard of building permits really moving anything or housing starts.
Yeah, I mean,
FOMC minutes.
snooze. It's going to be a snooze fest.
Yeah. All right. Great. Other than that, have you noticed any news that is worth talking about relative to traders?
At this point, no.
No, I've been
No.
seeing a lot of individuals are saying they're pointing out rounding tops in names, mostly AI build out names, chips and things like that. Saying a lot of I don't know, I don't want to take misquote anybody, but basically saying stocks top when their valuations are at all time highs. So there's a lot of that going around. We've had a few conversations about whether we think this is a bubble or not. And correct me if I'm wrong. I believe you are still, and I'm on the same page as of right now, that we are not in a bubble. I
Well,
think we're not in a bubble
define a
because
bubble.
number um wh- basically where so many. all the buyers are piled in. It's absolute euphoria. People are just buying because everything had like the dot com bubble. You add dot com at the end of it, and people just buy. And so stocks that do not have that aren't even making money absolutely skyrocket. And eventually there's nothing left to buy. And everything is so concentrated within a well, I don't know if it's I was going to say within a concentrated few or if it's a market, like the overall market. I would say it's more of the overall market because that's what led to the dot-com bubble crash, right? As long as I understand. So I would just say everything is overvalued. A ton of people have rushed in and there's nothing left to buy, and then all of a sudden sellers drop out.
So depending on who you are, you have let's say you have guys who are short. Let's say the most famous guy that's short right now is Burry, and he's getting his
Yeah,
clock cleaned. I mean, he's literally
yeah,
getting his
100%.
clock cleaned.
Yeah.
And I'm not
PLTR
saying
and NPIS.
yeah, I'm not saying that he's wrong. That's not what I'm saying. What I'm
Hmm.
saying though is when you're that vocal about your shorts and you're that vocal, the market will go after you. Whether you're right or not, they'll go after you.
Uh-huh.
They will go after you. The difference between, let's say, we had this discussion one morning, but the difference between the guys who got famous, Burry included, Paulson, all these guys who got famous during the crisis way back when, was that even though they were vocal about stuff, the market at the time wasn't really ripping against them. So it was different. It wasn't the same environment. So let's use Burry for example. So Burry, everybody knows he was short, and
Hmm.
his biggest issue that he had was that he was right, but they weren't marking his positions correctly. That was his biggest issue, and everybody like that. That's well documented. That was like his biggest issue, but he was right. His problem was that they just weren't marking his book properly. Okay, fine. On these other guys, they weren't short equities where they were short paper that really, to a certain extent, really couldn't go against them in huge ways. It was really, let's say, for example, in Burry's case, it was premiums that were eating into him because
Hmm.
he obviously he was buying CDSs, and he was spreads, and he was betting against certain things and certain I'm not going to get into the complexity of what he was doing, but the only thing that was really hurting him were insurance premiums because obviously when he was wrong, he had to pay the premium. When he was right, the books got marked down, and he was making money. That was what worked against him. In this situation, your trillion-dollar companies, back then, billion-dollar companies were like who were weren't so weren't the norm. Now, trillion-dollar companies are like a dime a dozen, and you have players in the market that didn't exist then. So they'll just keep pushing and pushing and buying and buying and buying, and they don't care. And zero DTE didn't exist. A lot of things didn't exist that would work against you. Here, the problem that you have is that everything is levered. What do I mean by that? You could have bubbles and all this wonderful things. There's a bubble. There's a situation where stocks are overvalued because there's more ETFs than stocks. They're constantly buying, whether they want to or not. They're constantly buying because their mandate is they have to have a certain allocation. So it just gets fueled, and that works on the downside also. So for right now, you can have a bubble from today until tomorrow, but if there's just a natural progression of buying, it'll just keep buying it. It doesn't care. You don't have a human that is looking at it going, okay, there's bubbles. And I think that's what a lot of I want to say the old school guys get wrong. I always talk about this in the past, but
Hmm.
they keep trying to apply the same metrics as if a human being is there. When you're dealing with a machine and you're dealing with a retail environment where you have millions of people buying one and two lots of things, it could be about it'll just keep going because they're never going to sell. Back then people would sell. Here, it's as weird as it sounds, retail doesn't sell. They don't sell. They just don't look. So you can't really have crashes. Like you have this guy. There was a guy on CNBC. I forgot his name, and he was calling for like a 50%, 65%, something like that, some kind of weird, some kind of wacky number.
Sure.
And he was like a respected guy. But what they all get wrong, and I'm not saying that I'm smarter than them, because I'm not. But what they all get wrong is that their assumption is that people are going to sell. Here, people don't sell. They just think they're just always going to get saved. So because of that reason, they don't sell. They never ever sell. That's why when you got that 10%, even though it was a 10% in the NDX, it didn't feel like a 10%.
Right.
Yeah, we had volatility, but it wasn't violent. You could tell people weren't selling. It was more hedges, but people weren't selling. Nobody sold. Nobody sold ever. So, like when you go to these guys, and let's say Raymond James or Susquehanna or Morgan Stanley, you go to these big money managers, and you ask them, what are their clients doing? Not one guy ever says, my clients are selling in a down market. They never ever sell. They'll figure out a way to hedge, or they'll try to learn how to hedge, or they'll do this and that, but they will not sell. So, because of that reason, as weird as this is going to sound, stock trading to a large extent, and I know you're not going to want to hear this, probably the audience is not going to hear this, has changed so drastically, because now the stock market to a large extent has become a high yielding savings account. That's really what it is. Because it just doesn't go down. And not because I'm sitting here saying I want it to go down. I don't care what it does. It goes up, it goes down. I don't care.
Right.
But what I'm saying though is it doesn't act like a risk market. There's no risk in the market anymore. If you buy something stupid, you're going to get punished 100%.
Sure.
But I'm saying, but you're not going to get, well, you might get clobbered, but if you're doing stupid things, then obviously you're going to get smacked in the face. But under normal circumstances, it just keeps kind of chugging along. So from a trading perspective, a lot of stuff that used to work just doesn't work anymore. And you have to a certain extent, look for markets that actually offer that. And if it doesn't offer it, like the worst thing that happened was 24/7 trading. It was the worst thing that happened. And now they've kind of added, single stock futures, which have no volume and no liquidity in them.
Mm-hmm.
But it was like the worst thing that happened, because now there's no shock and awe. There's nothing. It's just like whatever. So it's just, I know I'm kind of rambling, but there's really just, it's hard to say, short something. It's hard to say buy something.
Mm-hmm.
You really have to pick your spots correctly, and then just be patient with it. Which I know people don't want to hear, but it's just, at least now, for sure. Now in the next 2 weeks, for sure. Once things open up, there'll be two-way trade again. But for right now, you basically just, either sitting in cash or just sitting in positions and just sitting in them, and don't touch them. Just let them be. Which again, people don't want to hear.
Mm-hmm.
Like zero DTE does not work in this environment because there's no volatility. You're going to get killed in it. There's no volatility. So a zero DTE. So imagine you're buying zero DTE, and let's say you're buying it on tech. Let's just say for argument's sake, and the market moves 0.25%. You're getting destroyed. You're getting smoked. So zero DTE in this market, in this environment for the next 2 weeks, is one big giant waste of time. Don't even touch it, because you're going to get killed.
Did you hear about the options opening up at 7:15 now? I think that was new. Just came out a couple.
7:15?
Yeah, 7:15
in the morning.
Yep.
Okay.
So adding in, I mean, obviously, I would think that would have some sort of effect on the market, right? Just another nuance to pay attention to. More options chains coming into the market, starting earlier before everything's open. I'm pretty sure that's relatively new. I forget when it starts. It actually might start tomorrow.
They're just trying to make the market a gambling. They're just making the market a casino.
Yeah, that's what it is, right? It's more and more so. More and more so.
The last 2 weeks of August are always the most boring time.
Yeah.
By far. And you have to accept it. That now is boring. Just, it is what it is.
Mm-hmm. With that being said,
I know you're probably like, I wanted to do a pre-market show. Like, what am I going to do here? It's just right now. It's just like it's the most boring time of the year.
Well,
It really is.
I mean, here's the
This is
thing.
like having, let's say, this is like the last 2 weeks of December, between going into, right before Christmas into New Year's. There's nothing doing.
Mhm.
There's nothing happens. It's the same concept.
See, this is the difference though between the pro and the non-pro. The people that are trying to provide a quality service and provide education that's legitimate versus trying to sell you something. If we were trying to do a quote unquote pre-market show, like we'd be pumping up names like NBIS, AAOI, LITE, all of these super volatile names that are making very strong moves last week, probably on low liquidity, low volume. I don't even look at the volume of it, but um, there's no need to apologize because the fact of the matter is that August, last 2 weeks of August, it's a slow part of the market, and that's what it is. And in order to be a pro trader, if that everyone is striving to be, that I assume, that's taking trading seriously and not like gambling, you have to accept that it's part of it. You just because you don't want something to be a certain way doesn't mean that it is not that way. So
Yeah,
that's the difference between pros and non-pros. That's how I see it. So no need to apologize. Can't do nothing about it. Part of it.
if you do something stupid in August, like I did last week, I freely admit it. You get punished, and now you just whatever. You got to deal with it. So now you got to
Mhm.
deal with it. I could hide from it, run from it, and say, "Oh, it didn't happen," but it did happen. I got to deal with it now. I got 2 weeks to
Yeah.
fix it.
And I know you said you were thinking about something. Well, you say a lot that piques my interest, but you said buying and holding longer. What are you talking about? You talking about swings? Are you swinging
Yeah, I'm gonna have to. I'm not gonna have a choice.
futures? Are you swinging futures?
Yeah, I'm not gonna have a choice. I'm not gonna have a choice.
All right.
I'm not
Make
gonna
sure
get
you.
in order for me to get the move that I need in order to recoup and to get things back to normal. It means
Yeah.
I have to take on excessive size. I don't want to take on excessive size now.
hmm
So I'd rather be smaller and just hold for longer periods than take on excessive size because I'm not going to get paid intraday taking on excessive size. I'll probably get killed, which is kind of what
Right.
happened. Which is kind of what happened. So it just doesn't make sense. It just sucks because I've been having a really, really, really good string, and I really, 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 really don't want to kill my month over month because month over month I've been green. I really don't want it to end in August. I'm very upset about it, but I'm gonna try and fix
Hey,
it.
quick question. Do you care if I show the inside of the Discord real quick? I got to clear out the news so I can expand my chart. Do you care?
I don't care. I just have to.
I have this annoying thing where I have to clear out the news feed. Otherwise, it gives me a notification and I can't expand. There we go. Okay. Looking at NQ then. Let's prepare. What's the swing trade we're looking for? Do you have it? Do you have any ideas of what you're
Yeah,
looking for
I'd like to try and trade against the 3 day. I may have to give this a
against
little bit of room.
3 day?
Yeah. So right now I think we're trading. What are we
Oh,
trading now?
sorry. Gotcha.
Right now we're trading. Hang on.
220.50.
220.50, which is going to be a problem because I really have nothing I could trade against. So really, I may have to give this more room than I want to, but I may have to just give this room. Hopefully, we'll see where this is tomorrow. Ideally, I would love to trade, you know, get this thing. I don't know. I may have to, I may have to trade against the 3 day high, which is 280.50. I don't know yet. Honestly, I'm not exactly sure because what we've been doing. It's very hard to judge things now because what's been happening is we've been gapping up and then closing the gaps and going, from
Uh,
green to
uh,
red or whatever. So it's very hard to kind of formulate a plan because I think to a large extent we're probably going to hang out here for the foreseeable future. Um,
yeah.
I think once we get to 400, if we could get above that, we'll probably move another 400 handles back up. We'll take out the all-time high. That's kind of what I'm looking at. Let me get this up.
hmm
Hold on. Get this up. I think if we can get above, see, what I would ideally love to do is maybe, and this is where it gets. You can't risk 100. You're gonna have to risk. You're gonna have to risk here. So I think if I can get it down at let's just say, for argument's sake, I would even do this trade. The first day of the month is 22, so maybe buy 30s, risking to, let's say, 130, so basically 100 handles. That might be too tight. Then kind of let the 3-day take over and see if this thing could push up to, all-time high is what, a tad under 30,100, 31,000. Maybe it makes a run to there. That's very possible. It might do that. It might just drift the next 2 weeks.
I can see it drifting to 600.
Yeah.
I mean, this 30,100 area was pretty important to break and hold. I'd say it's pretty obvious how it got tight there.
Yeah, your first challenge was holding above 30,000, which we basically did.
Yeah,
because that was giving us some trouble. So now we held against 30,000, but you can't really. You're going to trade against 30,000. Everybody's looking at that 30,000. So if you got to be a little bit more careful. Like 100 handles is basically like, I would equate 100 handles to basically $2. So I would say 50 handles is like $1 and like something else, and then 200 handles would be, let's say, $2. 100 handles would be like $2, just from like a dollar perspective. So like, how do I get that number? So if you're let's say, let's just use regular size contracts. If you buy, let's say, well, I'm trying to think how you could do what you could equate it to. So a 50 handle move in the regular NQ contract is $1,000. $1 move in oil is $1,000, right? So that's kind of the logic I'm using. So you have to kind of look at it that way. So like a $2 move in, let's say, oil is, would be like a regular normal size move in, let's just say, NQ, just from a dollar perspective. Because let's say, for example, it moves $1,000. For the most part, most of the time, and the NQ is moving about $2,000, right? Now it's moving about $2,000, so it's about $2. So you kind of have to find ways to kind of bend it to look for what it is. Now, under normal circumstances, 100 handle move is pretty normal. It's easy to kind of see it. Here, you're not getting that. What you're getting intraday is you're getting 25 handle ranges that'll sit there for like an hour, 2 hours, 3 hours. So you're not really getting movement in the thing. So that's what I'm saying, is it's not forgiving. Like it's very hard to get at. If you get into trouble, you can't get out of it. It's almost next to impossible to get out of it, because of the fact that it's just not moving. So I think you could be safe, and you could kind of risk, 200-300 handles in this thing, and you'd probably be doing 1-to-1, 2-to-1 on it. You could probably get that. But again, if something wacky happens, you're going to get screwed.
I mean, that's always a risk, right? But you got your stop losses and accept your risk and move on. Whatever happens, happens. Right. Yeah, I'd be super. Like, I have not done it, but obviously, well, maybe it's not obvious, but to me, it feels obvious. Being a swing trader, mostly in equities, and I haven't really touched futures. I've told you, I just haven't. I literally can't get to the screen. It's very challenging in the mornings right now. But the idea of swinging futures indices is highly enticing to me. However, at the same time,
you got to be careful.
I know.
No, I'll tell you why. I'll tell you why. What you run into a problem is, depending on the broker and depending on the instrument that you're putting on, they change the margins. And you need to have enough in the maintenance period between 5 and 6 o'clock Eastern to cover. Otherwise, they will liquidate you out. So you got to make sure you have enough cash to sit in it. If you don't have enough cash to sit in it, you won't be able to do it.
Gotcha. That might be a. Can you help me work on like last quarter of the year? Can you help me work on a plan for that?
Sure. For Q4? Sure.
Yeah, Q4. Yeah.
Sure.
I would like to start dipping my toes into that. At least as I'm on East Coast time, it just seems like it's going to be the easiest thing to do right now. Well, maybe not easiest, but time
Easier.
reliant thing. Easier, yes. Yeah. Simply because of life factors, that's all. All right, great, sweet. I look forward to seeing how that trade, the plan, you know, um, plays out. Of course, anything when the market actually opens up, anything is fair game to change.
Yeah, I mean,
All right.
I mean, we'll see what happens tomorrow. Let's see, maybe if I can even buy it against Friday's lows, and then which would be like a gift. But we'll see. We'll see. I don't know.
We'll see how much we gap up.
Yeah, we'll
I
see.
can see us gapping up to the resistance right now, like 600 level, and just sell off again. That's been the hard thing about this. We just gap up and then sell off most of the time here.
So it's been making things challenging.
Yeah, it has not been the easiest. Speaking of challenging things, this week you've been letting us know that you messed up earlier, right? At the same time, you were able to keep your cool and limit your losses. And it seems like you have, number one, I know you've been in the markets for 20 plus years. You have a lot of time underneath your belt. You have a lot of skill, which is developed over time. Seeing charts, it's become an art to you. So I think the special topic of how to keep your cool with experiencing losses, it's a challenging one to develop as new traders. It took a while for me to develop. I can't say I'm still perfect. I'm not perfect whatsoever. I'm certainly better, but I'm nowhere near perfect. And so I think this is a very important topic to actually talk about. And you kind of brought it up. So if you could share your wisdom and what you've learned over the time and how you do indeed keep your cool during times of loss, whether it's just one or two losses or even drawdowns, whatever thoughts that you have, if you could share them for us, that'd be absolutely great.
Yes, it happens to be that today is actually perfect because for the month of August, I'm in drawdown. Shockingly, I actually went from green to red because I made some stupid things. We all do stupid things. It happens to everybody. We
Mhm.
all do it. It's just how you deal with it afterwards, and you gotta look at it from that vantage point. So number one, a loss is not a personal thing. A loss just means you were wrong or you were early, whatever it is. You got in, you were expecting a certain outcome. That outcome didn't come. You get out of the way. The worst thing you could do is just sit. If you sit in something and just let it keep going against you, that's the worst thing you could possibly ever do. Why? Money is fungible. You hit your account, you don't like where it is, you can always put more money in if you need to. That's not the problem. The problem that happens is that the loss is not the issue. It's what you do after the loss. If you take a colossal loss, then you're already right away, you're on tilt, you're rattled. You're completely and totally rattled because you're looking at it as, I got to get it back. So you'll do things in order to get it back. And what usually
Mhm.
happens is in that regard is that you'll get smoked. That's the first thing that happens. The second thing, which is the most important thing, whatever size you took on that loss, you got to, in that day, you have to maintain that size. If you don't maintain that size, you won't recover the loss. So let's say, for example, you had 1,000 shares and you took a $2 loss, and now you're $2,000 in the hole. If you put on 100 shares, you're not getting it back that day. It's just not happening. So if you get a $2 winner, you're not doing anything. So you have to maintain that same size, which a lot of people don't want to do. That's number one. Number two, you have to ask yourself, why did you take the loss? Did you take the loss because it wasn't a good trade? Did you take the loss because it just didn't work? Or did you take the loss because you did something dumb? If you do something dumb, shut it down. Shut it down, walk away, get yourself back in line, and then come back. If you can't get yourself back to normal, get out of then don't be there that day. If, for example, you're in a market that has a lot of volatility and you're just testing levels and they just don't work, if the market is moving around enough, and what happens is it takes you a lot, really where the skill is, it's observing what the market is doing to understand what the pattern is. So sometimes you got to sit. Japan numbers just came in. Okay. On an annualized basis, you have to sit and start to see what's going on. You take a step backwards. So a lot of times when I'll take a loss, what I'll do is I'll stop and I'll just look and I'll watch and I'll wait. And I may miss a move, but I'll wait to see what is the pattern. What is it doing? Is it barcoding where I can buy a low and sell a high in the range and just keep doing that over and over and over again? Or was I just premature on an entry and I thought maybe that entry was good, and instead I had a second entry or a third entry, and it goes down to those second and third levels. So I'll give a perfect example. Thursday, the market ripped out of the gate, right out of the gate. So I missed all the entries. Okay. However, Thursday was a losing day anyway for me anyway, but that's because I tried to short it. Again, stupid things. I just did stupid things, but it was fine. It wasn't so bad. Friday was really my dumb day. But you wait and you kind of start to see what is it doing. And if you can keep yourself in relaxed mode, you could say, okay, I see this happening over and over and over and over again. Now, and now over and over again doesn't mean after 15 seconds. It means if you're watching for an hour and you see the market is doing the same thing over and over, you can rely on it. You can say, okay, fine. I see that it keeps hitting this level, backing off. It keeps hitting this level, going back up, or vice versa, if you're looking to short, whatever it is. Then you could start putting together plans. If you see, for example, and this was a good one, I think it was Wednesday. I think it was Wednesday or it was Tuesday, I don't remember. I used NQ because I was watching the NQ. The NQ was getting to a 3-day high of 29,900. It hung out there for 3 hours and it was not gaining any traction. Eventually, towards the end of the day, it rolled over. Why? Because that consolidation area didn't hold. But you clearly saw that this was a problem because it wasn't getting above 29,000. It was just 29.9. It was getting there, but it just wasn't busting through it. We use a trick in the morning to try and judge strength specifically on tech to understand what's it doing. We use the opening print, besides opening range, we use the opening print to see where if there's strength there. Long above, short below. Why? Because a lot of times in the indices specifically, the opening print plays a very, very big part in what the day is going to do. Obviously, then you could kind of find ways later on what to do with it, but in the beginning, why? Because a lot of people set their watch lists from the 9:30 open. So percent high from open, dollar from open. And they're judging things like that. So for example, let's say we have a stock that gaps up 10%, and all day long it's selling off. So at the end of the day, you'll hear in the media, oh, it was up 5%, but it was a short all day long. Why? Because from the opening print, it was just going down, and vice versa. It gapped down 10%, and it recouped and was up only down 5%. Why? Because from the open, it was a buy all day long. As you gain experience, you start to see these types of patterns developing. A lot of the game is pattern recognition, and it doesn't need to be complicated. It just has to be. You start to see these things happening over and over and over and over and over again. You say to yourself, okay, I can test it here, and if this works, okay, and I can do this, 10 times, and you get your money back, or whatever. But really, it comes down to a couple of things. One, the loss is not personal. As long as you're not losing your cool and you stay completely calm and focused, you will get it back. You will get it back, but you have to stay calm. Now, I can speak from experience because I've had this happen to me. So I'll give a perfect example. I tried earlier in the week to I think I tried to buy. I was trying to get into a small position with micros, and inadvertently, by mistake, instead of putting on a 5 lot of micros, I by mistake put on a 5 lot of regular NQ contracts. So for those of you that don't know the math, a 10 handle move on a 5 lot is $1,000. 20 handle move, $3,000. I ended up getting clocked. Now, because I didn't realize that I had it on. Why? I don't know. And I have certain parameters, and I just was very zoned in on what I was doing. I just completely missed all of my safety guards. It happens. It happens to everybody. You make a mistake. And I'm putting this out of position. It just happened. And everybody knows it happened. At least in the room, everybody knows it happened. And I got clocked on that move for $3,500. Now, in the grand scheme of things, it's $3,500. Not making or breaking, but it's $3,500. It was a hit. I could have done two things. I could have said, "Oh my God, what am I going to do now?" and just shut down and just start crying and be like, "Oh my gosh," and be in the fetal position, or let me get out of this thing. I got to figure. This mistake happened. I got to get out of this thing. So what I just said a few minutes earlier was, if you take a loss on 1,000 shit, you got to do the same thing. So I had no choice. I had to put back a 5 lot on. I didn't want to, but I had to, because that's just the rules that I follow. Now, I had in mind that if it went against me X amount, I was done for the day, and I would have just been like, whatever. I would have been upset, but I would have been like, okay, I followed the rules. I got to deal with this. And because of that reason, I got the whole thing back, the entire thing back. So I went from being mega, mega red to being green on the day. Does it make me great? No. It was just a matter of just staying calm and understanding these things happen. You got to deal with it. First thing you have to do is you have to stay calm. But you also have to know what you're doing. If you don't know what you're doing, you won't recover. You also have to know the environment. Like, I can tell you right now, I had 3 days in a row where things just didn't work. Wednesday, Thursday, Friday were 3 red days for me. I'm saying it for the whole world to hear. They were 3 red days. Friday was my worst day. Friday actually took me in the small account, because I was doing this in a small account, took me from being green on the month to now being red on the month. So now I'm in the hole. And then I was like, okay, that's it. But why? Because the thing that I realized afterwards, and I wasn't upset, but what I realized afterwards was that for what I do, the market is not conducive for that. So I have to adjust. Now, granted, it took me going from green to red and being in a hole now to realize that, but that's okay. We're all human beings. We all make mistakes. So now I have 2 options in front of me, because I got to deal with this. So my option is option 1. I say, okay, the hell with it, and I'm done for the next 2 weeks, and I'm going to take the loss on the month, and the hell with it. Or option B, let me dig out of this thing slowly. I got 2 weeks to get out of it. I know that this is not going to be a great month, but let me get it back to green. So I'm choosing option B. Let me get it back to green. So what does that mean? That means for me, I'm going to be reducing size drastically, looking for small wins, getting P's on the page every single day, and build momentum. Do I think that I'm in a slump? No, I'm not in a slump. I can tell right off the bat, I'm not in a slump. In June, I was in a slump. I got out of it, but I was in a slump, and I know I was in a slump. Now I'm not in a slump. What I'm facing is a market that's just not conducive for my style of trade. So I have to adapt to the market environment in order to make that work. So what does that mean? It means I got to sit in things for longer than I normally would, which also means I may have to take some stuff home. It also means I have to be smaller and just look for bigger moves. That's fine. But I know it's not me. I know it's not like I'm misreading things. Where I got into trouble on Friday, and this was on me, and it wasn't a slump thing, it was just on me, was I was testing levels on the lower end, and they just weren't working. For whatever reason, they weren't working. And when I tried to short on Friday, because it doesn't have that same rhythm that I like, it was head faking me out. So it spun me around a little bit because it doesn't have that rhythm. For my personal style of trading, as a breakout trader, I like power, I like movement, I like volatility. And there's a rhythm to it. But when that rhythm is not there, or that rhythm changes, there are times where it takes me a couple of days to reacclimate and readjust to that new rhythm. That's what I'm dealing with right now. I had 3 days where I got to readjust and reacclimate to that rhythm. Granted, Friday was a bigger loss than I would have expected, honestly, but that was also a function of a mistake on my part, which was a big no-no, but I admit it. What was the mistake? I tried to recoup Wednesday and Thursday on Friday, so I went in with bigger size than I should have, and because of that reason, I got punished. It's that simple. I got punished. So I learned my lesson. I got my hand smacked by the teacher with the ruler. Now I got to deal with it. It's fine. But that's just the nature of what it is. If you can stay calm and you can stay focused and you can just stay with your plan and say, okay, if this happens, I'm going to do this. I'm going to do it on a smaller size, and I'm going to just get the next trade be a profitable trade. You could build off of it. I tell the guys all the time, if you're having trouble, just get P's on the page. P mean profit. Just get a profit on the page. Even if it's $1. You do that 1 day, 2 days, 3 days, 4 days, 5 days, you start to build a momentum. It might not be a money momentum, but it starts to build internally a confidence momentum. The difference between winners and losers is confidence, not overly aggressive confidence where you think that you're invincible, but where
Yeah.
you say to yourself, I know I can do this. I just have to find a way to just deal with it one trade at a time, one day at a time. Just get profit and you will get out of it. Just like you go on stretches where you don't have losing days. Now, full disclosure, for the past 8 months, I haven't really gone on. I was looking over. I think out of the past 8 months, I think I've probably had 20 losing days altogether, maybe 25 losing days out of the past 8 months, which is incredible. Like
A solid.
you know, which is basically unheard of. But just not that I'm amazing or anything. It's just things were working to my strength. So when things are working to my strength, I just keep going and I keep doing it over and over and over again. If you do the same thing over and over and over and over and over and over again, not not insanity, but things that you know that work, and you just do the same thing over and over and over again, the odds
Mhm.
will revert to you. What I think people do is when they start getting into losses, they start right away changing styles. I'm going to change this. I'm going to change that. I'm going to change this. Think about what got you to where you were. So if you think about it in those terms, yeah, everybody has bad days. Everybody has bad weeks. Everybody has bad months. It happens to everybody. But if you think about what's gotten you from point A to point B, and if that's been working, then just keep doing it. Yeah, you're going to have times
Mhm.
where things change. You got to adapt. Fine. That's no big deal. I could say it because you know it. One of my biggest strengths is the crazier a market is, the better I do. The crazier it is, the better I do. When markets are
Mhm.
dead and their volatility is sucked out and they're blech, those are the markets I don't do well in. I do not do well in slow grinding markets. I'm the first one to admit it. I just don't do well in them. Why? Because it doesn't cater to my style of trading. As a breakout trader, it just doesn't cater to it. Can I trade them? Yeah, I just have to adjust. But it takes me a couple of days to adjust to it because, again, my style by definition, that's why I stick with markets that are breakout volatility markets. I only stay there. I don't trade grains because of that reason. I don't trade metals for the most part for that reason. I stick with what works. So natural gas, which I was trading a lot of, the volatility is not there. It's not conducive to what I do. I'm not there right now. So right now I stay where that volatility is. It used to be oil. Right now, oil's dead. I'm not in oil. I think maybe I've traded oil, in the past quarter, very little. I don't think I've touched it. Why? Because it's not conducive for what I do. So I stick with those types of markets. Coffee, in 25 was giving me opportunities every single day. I was there every single day, and it was amazing. It's not the same market as it was, so I'm not there as often. Now, granted, it's summer, so things slow down a little bit, but the volatility changed a little bit. So I changed. It's recognizing when things change, what is changing, what happened, and not making a ginormous mess because you're trying to push your will on the market. If you just take a step back, let a calmer, cooler head prevail, you will get out of it. If you're a profitable trader, you will get out of it. It's plain and simple. But don't start maxing out size to do this because you think, okay, there's no volatility, no big deal. You're gonna get smacked. You just have to stay calm. If you stay calm, you'll get out of it.
Well said. Thank you. Let me make sure I have this right. So, firstly, how to handle a loss, at least one of some ways. Number one, you don't take it personally. Obviously, they happen. So, you have to know how to handle it
Before you say
afterwards.
anything, hold
That's
on,
what,
hold on, hold on, hold on. I should have said
yep.
this in the beginning. In this business, you need to learn how to lose. If you can't take a loss, don't do this. That's plain and simple. If you cannot, and it doesn't make a difference if you're a winning trader or a losing trader. If you cannot take a loss, do not do this job. Do not be in the market, at least on a short-term trading basis. If you cannot take losses, do not do this, because losses are going to happen. Yeah, I can tell you I've gone a month straight without a losing trade. Sure, it happens. You go on some stretches where just things, work out and you don't lose that. You just don't lose. That happens. It's not normal. Can you go many days without, being green? 100%. Can you have in those days red trades? Sure. Can you go on months and year stretches without having a losing month? 100%. Can you go weeks without having a losing week? Sure. But, and this is a big disclaimer, you have to know how to lose. If you don't know how to lose, you're not going to make it. And this is not about diamond hands and zero DTE and Wall Street bets doing all these things. I'm talking about short-term trading where you have to really make quick decisions. If you're not able to take a loss, and a normal loss, because your first loss is always the cheapest. So if you can't honor that, don't do this. You will get crushed. It's really that simple. Sorry.
Don't apologize. That's perfect. You need to learn how to lose in this business. If you cannot take losses, you should not trade. You have to know how to lose or you will not make it. Quote unquote. Going back to it. How to handle a loss. Do not take it personally. They happen, yet you have to know how to handle it afterwards is what matters. How you handle it afterwards is what matters. Number two, you ask yourself, why did you take the loss in the first place? If it was due to stupidity, simply just step away, call it a day. However, if it was an appropriate loss, it was a good trade, it just didn't work, then you have to take your time to assess the situation. You have to wait and see what the market is doing and see if there's a pattern to take advantage of. Number three, you stay calm, you take your time, you put together a plan, and then you simply execute. If you must, you decrease size, you go for singles, and you get P's on the page, profits, and which will ultimately help you with your confidence and get you back into the rhythm.
Yeah, I mean,
Did I
and you have to
cover
watch the
that well?
patterns. You have to take a
Mhm.
step back and say to yourself, okay, this is not working. What am I missing that I didn't see beforehand? But you have to look at it with calm, with calm. If you can look at it with calm, and you could say to yourself, okay, this is happening, that's happening, but I see where I'm missing things, then you can get out of it. If you can't do that, let's use a real world example. Okay? Let's use a real world example. Okay.
Mhm.
Let's pull up NQ from Friday.
Thank you from Friday. Got it.
Right? Put it up on a 10-minute chart.
10-minute chart. Let me hide all this stuff. 10-minute chart, NQ. Friday.
Okay.
Oh,
At
that's Thursday.
11:30, we bottomed. And we're going to use 30,050. Okay. We're rounding.
Mhm.
Okay.
Right here.
We
Yep.
bottomed there. Okay. We tried to bounce off of it. We moved back up at 12:20. We tried to reclaim 30,100. We
Mhm.
fell right back down to 3050. We're basically hovering at 3050. Okay. Now, when you look at this, you could see right away in this 10-minute bars, you could see we were basically moving at a 25 handle range from 1240 to about 10 to 2. We were just basically moving in a 25 handle range, roughly. Right? You see that? If
Mhm.
you click over, you could see right away. But
Yep.
you see two things. One, we couldn't get back above 30,080 and hold it, is number one. We couldn't even get to 30,080, but we were also not breaking back down to 30,028, which was the low of the day. We were just hovering. So let's just say we were just bouncing around there, okay? But we were doing nothing. So right away, you could see in this chop slop, there's nothing to do here because we're only moving in 25 handles, which means that unless you time it perfectly where you're buying 50s and selling 70s, you're not going to get out of this, okay? So this isn't a good trade. However, you see that right away at 10 to 2, something changes. Now we get back above 3080, we get to 3090, but we pull back. We don't pull back to 50 this time. We get back to, let's say, 62. So now we're trying to move out of this kind of range. So now, you know, technically you said, okay, we sat here for an hour and a half or an hour and 20 minutes, whatever it is, between 50 and 70. Now we got to between, you know, low, a drop under 80 and 50. So basically 25 handles. Now we pop out of it. Okay. So now, you know, okay, if let's see what happens here. Are we going to hold this, or is this going to be a fake out? If it
Hmm.
holds, you know basically what you could trade against. Now, this was a bad example to a certain extent because we really didn't do anything. But there's two things that make it a good example. One, you see that that low of 28 was secure because we were not getting through it. You also know that to a certain extent, 50 was holding. So if you bought 50, you could use the low of the day at that particular point. Now, could it have broken and you gotten stopped out? Of course. Obviously, that could have happened. But
Hmm.
it's just watching and seeing what's going on. We're spending time. Time is showing you that they don't want to push it lower. And if you look at the way we went down on Friday, you know, what really got me was size. It was nothing else. I tried to recoup something because the move itself was not big by any stretch of the imagination. We really didn't go anywhere. It really, I just got clipped because I was just a little bit too bigger than I should have been. Fine, it happens. You know, whatever. I'll deal with that. But it's really more looking at how we're moving. So if we expand this a little bit, okay, and let's go to Thursday for a minute because that's important. Go to Thursday for a second.
Right here.
Okay.
9:30 open.
Okay. So if you look at Thursday and you go to around 1 o'clock, we basically sat at 2,900 from 1 o'clock until about 3 o'clock. We sat there for 2 hours doing nothing. Now, what is this telling you? Number one, we couldn't get it back above 2,900 is number one. The second thing you saw was that we weren't getting back above that quasi swing high from 1020, which was 29, let's just say 29,945. Okay, I'm going to leave the change out, 945. So you knew right away this is probably not a buy. Okay, on a break, maybe this would go. Now, did it really move? Yeah, I mean, but again, there's no volatility here. We went from 990 all the way down to 825, whatever. So we're
Hmm.
not really moving anywhere. So it's more a question of just trying to understand what we're doing, so that when you make an error or you see thing that isn't working, what could you see now that maybe helps you to get out of this stuff? Now, am I going to sit here and tell you that going into tomorrow that this is an amazing trade? In all reality, right now, if you think about where we are, we're basically trading. We got to 228. Okay, 228 puts us basically where we were at 10 o'clock Friday. It's basically where it put us. We topped out over there and we fell back down. Now we're trading 188. So we're basically trading to a certain extent between where we were at 10 o'clock and 10:10. You know, from like let's say 9:30 to 10:10. So we've really gone nowhere. It's also put us where we were to a certain extent. Sorry, that was Wednesday. I apologize. Wednesday, sorry. Was the 990. That was my fault.
I was
But
gonna say,
it's
yeah.
also put us, yeah, what it's also put us at is where we were Thursday from 2 o'clock and onwards. So have we really gone anywhere over the past 2 days going into tomorrow? The answer is no. We've gone
No.
nowhere. So it's understanding where you are and where you are in relation to the position you want to put on to understand, okay, should I get involved here? Should I not get involved here? Now, I have a feeling I may not be able to get out of this. I don't know. I'm going to have to go for a swing, but I don't know if I'm going to be able to get out of this because, again, the market is not conducive to what I normally do. So because of that reason, I'm a little bit more cognizant of that fact. Now I know that August may be a red month, and if it's a red month, then so be it. You know, it'll be what it'll be. It's going to suck, and I'm going to be annoyed, but I'll get over it because I know in September everything will be fine.
Hmm.
You know, but it's just understanding that August is just historically not a good month. It's just not. Many traders have difficulty in August. I would say most have difficulties in August. Most.
Good stuff. Good stuff. I don't think I really have anything to add to that. I look forward to watching you and through this process. I'm obviously rooting for you. Yeah, at the same time, if you don't come out green in August, I'll still love you anyways. Um, but either way, it's always good to see someone at your caliber, um, how you execute and really just how you handle things. Just simply by listening to you and listening how a professional trader, someone that's been around the market, just simply handles themselves, whether they're winning or losing, is beneficial to be around. You become the average five people that you hang out with, right? I know we don't hang out with people or like in person, but it rings true. You surround yourself with the right people, and they slowly start seeping into your behaviors. And this behavior for trading, it's very valuable. So, number one, I appreciate that, and also thank you for your just ultimate transparency. You don't get that nowadays, and that is very valuable. So, thank you.
Listen. I wish that the what's it called that August would have been better. I wish I wouldn't have done something stupid and I would have just not done stupid things on Friday. I did it. What am I going to do? What am I going to do?
Yeah,
Yeah.
yeah,
Everybody does stupid things. I just happen to have gotten punished for it. That's it. It happens. What am I going to do? Cry about
you
it?
get
Like, what am I
caught.
going to do?
Might
I'm
help you feel
confident
better
enough in my abilities that I know I'll get out of it. So I'm not worried.
for
Listen,
sure.
August may end up being a red month. It is what it is. I'll deal with it. I'm still very green on the year. So like it would have been nice to have to go all 12 months without having a red month, but
Yeah, yeah, yeah.
we'll deal with it.
Let's take a look at something real quick here. Let me load something up. Where are we at? What are we complaining about?
Are you looking at the site? I didn't update it yet. No, I didn't update it yet.
Yeah, you didn't update it yet?
I didn't
Yes,
update it yet.
I'm on your small account results tracker.
Yeah.
Yes.
So I'll tell you what the
Listen,
number is.
people, listen. He's dogging on himself right now, which is completely appropriate. We all make mistakes, but look at these returns. He has not updated yet, and he's up 543%. You can look at the net results and where he started this. Where'd you start this account? Starting balance $3,123.29, and he's up at look at the net result right there. So,
Yeah, but that
uh,
no, that number, no, that number. No. So in full disclosure, I was I think the month of August was up like $1,500.
mhm.
I think I'm now down like $800 on the month. So I think it went from
Oh
like
no.
20.
So
Yeah. So
what are you
I'm
down?
still
What are you up? 500% now this year?
something like that. Yeah, something like that. I think the account is now somewhere in the 18s. In the 18s, I lost like 2 grand last week. So
You'll be
just
all
do the
right.
math. Just do 20,000. What's the amount? What's the math? 20,118. What's what the
$20,110.82.
Okay, so subtract 15 and then subtract another like 807. That's where I should be.
So you're probably just under 18 then, or so.
Something like that, yeah. Which is still fine. I'm
No,
still, it basically put me
yeah.
where it put me is basically put me where the account was, I think in mid-July. That's really what that's if to put the loss in context, it's basically it didn't kill a month. It basically ate up like in that small account like a week and a half. That's what it did. That's really what it did. So it didn't really do much. You know what I'm
Hmm.
saying? So like when you
Yep.
put it into context, it's like, yeah, it sucks. But if and it's the biggest loss this account took in a week. But it contextually, it didn't really. Obviously, it stings. It sucks, but it didn't really hurt it. You know what I'm saying? Like it's not hurting anything, so to speak.
Yep.
So whatever. It is what it
Great.
is.
All right. Thank you very much, Dan. I appreciate your time. Go and tell listeners where can they find you. Number one, I am on your website right now.
Yeah. So, yeah. The website's not getting a lot of traffic, so we got to get the traffic up over there.
That's all right. We'll
I
get
don't.
there.
I don't know why. I think if I told you the numbers, you'd like have a heart attack. But it's
I
Fishpond
wouldn't.
Trading Group, fishpondtradinggroup.com. So that's one place. Um, then it's YouTube Fishpond Trading Group, and then X is I think what is X? I don't know what it is. Oh,
Babyfish underscore TG.
yeah, there you go. Yeah. I'm going to get a little bit
Cool.
more active the last 2 weeks of August, just because I haven't I won't be updating the YouTube page with weekly videos. What I will be doing, because there's nothing to really recap, I'm going to be putting out some other content that I think might be better, consistency type of content, just more practical advice for traders, like real
Mhm.
advice, as opposed to just trading and data. It's a tough gig, but if
Yep.
you tackle it, in the right way, you can be successful. I said this to the group, and I'll end off with this. Your job in the beginning is not to make money. Your job is to survive. If you can survive the first 2 years of trading, you'll be fine. Your goal is just to survive. Now, now if you're making, and this is where I think fake funding becomes an issue, but if you're making $25,000, $30,000 in a month, your first month of trading, something is wrong. You're not going to, something is wrong. That's not what trading is. Trading is pattern recognition. It's an art. It just takes time. So your first job is just to survive. And one thing I want to say about the small account, which I didn't say in the past, but I'm going to say it now because I think it's worth mentioning. You have to be realistic. A $3,000 account is not going to make you a millionaire. Can it get you there over years? Sure. But if you can take a $3,000 account to $20, $30, $40, $50,000, you can build off of that. You're not going to be able to scale 3,000 to 5 million in year one. It's just not going to happen without doing excessively stupid things. But you can do it. You can take that same $3,000 account and get it to $1 million, within